I read the Goldman report this morning. What's the likelihood of more rig count declines or a drawdown in U.S. crude stockpiles?
Yeah, so the reason this report from the Goldman analyst, it's Damien Corvalin, who's actually been one of the more bullish guys when it comes to oil prices, the reason it's interesting is because he points to two factors, right? He's talking about the effectiveness of OPEC's policies, but also whether or not OPEC will actually extend those policies themselves. Now, when it comes to the effectiveness, this is why he's talking about the need for sustained inventory draws and U.S. rig count declines. We haven't really seen that yet. I think maybe 2 weeks ago now, we saw the rig count decline by 1 or 2, and then last week it was already back up. But when it comes to further action from OPEC, it starts to get a little bit dangerous for the group here. Remember back in May, we had the Saudi energy minister, and he stood up and said that OPEC was prepared to do whatever it takes when it comes to rebalancing the market. And then they delivered on that, right? They said they were going to extend the production cut agreement by 9 months instead of what was then expected to be 6 months. And yet it hasn't proven to be enough. The danger here is that the market really starts testing OPEC's will for further action, and OPEC finds itself in a sort of downward spiral where it has to keep ramping up its actions in the market.
Tracy, how far away is Goldman Sachs from the consensus in its view on where oil goes from here? Given the recent news surrounding its commodity business, I'm just curious as to whether or not it's kind of middle of the pack or out on the fringes of the distribution.
Yeah, it's a good question. So remember, they're actually sticking to their 3-month WTI forecast, which I think is about $47 a barrel. But they are cautioning that the tail risk is there. We could see oil dip below $40 a barrel. Lots of moving parts to that forecast. For instance, a big one right now has to be Nigeria and Libya. We saw the Kuwaiti energy minister just yesterday say that they might include those two countries that had been exempt from the production cut agreement in some sort of new agreement. The fact that those two countries have ramped up oil production basically means that OPEC output for currently is on par with what it averaged over 2016. So you can see all the moving variables here. A couple analysts also pointing out that even if you did include Nigeria and Libya in a new production cut agreement, you would still have to have their increased output offset by some tweaks to what, say, Saudi Arabia and Russia are doing. And that's when you really open up this thorny issue of who bears the brunt of these production cuts. And I'm not sure OPEC is currently in a position or has the political will to dive back into those discussions. But these are the questions that the oil market is asking right now, and you can see how difficult they are to actually answer.